Hello everyone, hope you all had a good week. Let's do another trade review. So I'm going to be reviewing a trade that I took on Wednesday of this week. It was a trade on Nasdaq, as we can see. I believe it was about $5,600 profit, so on the lower end. But this was a trade that had a lot of partials in it, rather than just letting my whole position run. I was going to talk through those, why I took partials at the places I did, and just like always, my general thoughts on the trade and what I was looking for. So let's get into it. So we're starting on the weekly chart for Nasdaq. Not going to be on here for long. Just one thing I wanted to point out, and that is consequent encroachment of this wick. So I had this labelled at the start of the week. I believe I had it labelled for last week as well. So I've been bullish on Nasdaq for the last few weeks, and we've been being held by this weekly gap here, just between here and here. So we've been being held here, and then I drew this line because this is what I wanted to see price move higher off of, and you can see we got a perfect reaction there. But yeah, so this wick filled in this gap, so we shouldn't see a return to this gap because it is now a balanced price range. You can see it be touched slightly, but it doesn't need to be touched anymore. It's better for bullishness if this is now left alone. So we look for consequent encroachment at this wick, which is this purple line here. So obviously this is the week we've just had, and you can see last week is when we came down to touch it. So let's drop down to the daily. Again, here's this line. We drop down. Let's go into the hourly. So to end last week, we took this sell side and we touched this line perfectly. Then to start the week we've just had, on the Monday we dropped lower and we just about missed this line, but close enough. And this was also an SMT divergence with the S&P. S&P made a lower low here on the Monday, came below Friday's low, whereas this didn't. So that tells you that this is looking for higher prices, more so than S&P. Now, let's go to the Wednesday. So this is the day I was looking to take a trade. This is the day that with the trade that I'm reviewing. So I'd seen that Monday we'd had the SMT. Tuesday had been a big bullish day. So we'd had quite a large bullish day on Tuesday. Wednesday opens up, fills in the gap, then gives a nice high close and immediately continues that bullishness. We then get to the top of this daily fair value gap. We then come down to fill in this gap. So at this point we've filled in a high time frame array, or we've reached a high time frame array. So if it wanted to come lower, it would come lower off this, maybe offer some relief, and then we'd maybe see it close below here. That would tell me that we're coming lower, and I would then target 25%, 50%, and 75% of this wick. But we didn't. We touched the top of this gap, we came lower down to fill an hourly fair value gap, and then we continued higher. And we took this level of buy side liquidity, and that's where the idea for my trade started. So just remember, this grey line is hourly buy side liquidity, and it's quite a substantial high as well. It's quite an important high. So let's go down to the 5 minute. So again, I've said this in previous videos, but I'll say it again now. The time slot I like to look for trades in is between 2:45 p.m. to 3:45 p.m. UK time. So that is, I believe, 9:45 to 10:45, I think, in Eastern Standard Time. So it's basically half an hour, 15 minutes after equities open is when the hour starts, and then an hour from there. That's my sort of golden hour where I personally find that price is cleanest, and I'd find it easiest to read during that hour. So you can see that off the opening bell, which is 2:30 here, we came higher and we came for this buy side liquidity. We then immediately came off that and we came to pair that liquidity here. So we'd taken the buy side. Anyone that had buy stops above here looking for a breakout is entered. They're putting their stop loss below here. So what does price do? It comes to trigger those buy stops and then immediately comes to kick everyone out. So at the start of my hour, we are now in a position of neutral order flow. So I'm waiting for the market to now tell me if it's going to continue higher, now it's kicked everyone out, or if it does actually want to come lower now. So that was at the start of my hour. So we have this 5-minute balanced price range here, which we come up to fill, and then we give a nice low close. So if I was looking for lower prices, after seeing that, I would want to see this next candle close below these two. And then I would sell this as an order block, and I would be targeting some form of sell-side liquidity or maybe this imbalance. But that's not what we get. I'll highlight this gap, and then we'll drop down to the 1 minute. So here we go. We've taken the buy side, we've kicked everyone out, we filled in the 5-minute balanced price range, which, as we can see on the 1 minute, has this big gap here. So we fill this, then we retrace. Like I said, if we wanted to see lower prices, we'd see it close below the 5-minute gap, but that's not what we get. We come higher, lower, and then we start moving higher again. So this gap is the highest you would want to see price come if it was going to come lower. If it was going to move higher, you'd want to see it fill this in, move lower, and then come back above any premium arrays in here. Because then that would tell me, this is what I was thinking when I was looking at price, if we overlap any premium arrays in here, that at the very least tells me that it's probably going to come for the next imbalance. Most likely means we're going to come higher for this, but at the very least it tells me that we're going to come up for the next premium array higher than this. So after we've come lower, we then overlap everything in here. We overlap this inversion fair value gap, which is actually a balanced price range. We overlap consequent encroachment of the this is now a balanced price range as well. We overlap mean threshold of this order block. It overlaps every premium array in here. So that tells you that it's not done coming higher yet. So we're going to label the next premium array after this gap, which is this gap here. Now you might be wondering why this gap in particular. That's because this is the first PD array of the opening range of the day. Sorry, this is the first fair value gap of the opening range of the day. So opening range is at 230, which is here. So then after 230, we're looking for the first fair value gap. We have redelivered rebalance here, but that's not going to cut it. We're looking for the first fair value gap, which is here. So the first fair value gap is quite important. I'm not going to go too much into detail. If you want more detail, go to ICT's YouTube channel. I'm not here to teach his concepts. I'm here to teach how I use his concepts. So yeah, I had this delineated. So once this candle closes above all the premium arrays in here, I know this is my first target for price. So I'm looking to enter a buy, and this is going to be my first target. My overall target is up here, but this is going to be where I take my first lot of partials. So let's put the executions on. So I shouldn't need to go into too much detail with the entry, because this candle closing up here tells me we're going higher. What's the very first available PD array? This 1 minute fair value gap. That's all we need. Actually starts here from the volume imbalance. Yeah, I would have liked to get it on this candle, but I was a little bit late. So we got it on this candle, but we still got the high of the fair value gap. And my stop loss was, I believe it was down here somewhere. I wanted it below the balanced price range here, in case price wanted to come back down to here, or below the implied fair value gap, which is when you have two wicks like this either side of a candle. You mark from consequent encroachment of each of the wicks. This becomes an implied fair value gap. So I had my stop loss just below here. Obviously, I'm not wanting to see price even come to fill in this gap properly, but you have to allow for that, especially with the conditions we're in with the US elections and everything. This was the day Trump was announced as president. So yeah, you want to allow it to at least wick lower, because the wicks do the damage and the bodies tell the story. So you need to allow for it to maybe wick lower than what you want to see it close in. But was very nice. We left half of this gap open, and we got some immediate feedback. So we immediately came higher, and I took my first partial right when we touched this. I believe I then moved my stop loss higher, and then I added more to my position. So I added 6 contracts here, and then I added another 2 here when we retested this fair value gap, because if we are moving higher for up here, like I'm suspecting we are, this gap is where we'll come higher from. We will not come lower than this gap. We've already worked this fair value gap. It doesn't need to come down there. When you have a sort of inkling or a bias in the market, you don't want to see it take a long time to do that. So we've already worked this. It doesn't need to come lower for this again. If it was to come for this, we might not be. It's basically the market telling you it's not really in a rush to come up here. But you want to see the market be in a rush to get to where you're expecting it to be. It's a great way of confirming whether you're on side or not. It's how quickly is the market wanting to get up there. You'd want to see it, for example, not completely filling in gaps. You'd want to see it just touch it and then go. Sort of it saying, I don't have time to come all the way down there, I need to get up here. So yeah, so even though I'd taken a partial here, because it could just be wanting to come up to here before coming lower, but I'm pretty confident it wants to come up to here. So I add more to my entry here. Then we again get immediate feedback. We close above this, which is absolutely key. Closing above this means that we can move our stop to break even and we're safe, because this should protect price from coming. It shouldn't come lower than this now that we've closed above it. So then my next partial was this gap here, because like I said here, once it had filled this in, if it was going to come higher, we'd look for the next imbalance. So that's here. So that's where my next partial was, as soon as we touched this. And then quickly after that, we reached up for this volume imbalance. There we go. And I took another partial there. And I had my stop loss. Looking back, my stop loss was a little tight. I maybe could have had it below this gap, but I had it, I believe, below this fair value gap, which, as you can see, twice held price. After this second time, I was wanting to see expansion higher, but instead it just created relative equal lows. So when you see that and price sort of stalling out a little bit, before getting the next move higher, you can expect it to come and take these lows. So I'm not typically in the habit of moving my stop loss lower again once I've already moved it up. So I had it below this fair value gap and volume imbalance. So once I saw these relative equal lows created, I thought, okay, it's probably quite likely that that's going to get stopped now once we didn't get expansion after touching this again. I was hoping that we'd come down, touch it, get expansion, come down, touch it, and then we'd get expansion up to here, but it was stalling out too much. It touched this, moved higher, taking this high, so people now had buy stops above here that have been triggered. Where are their stops? Below here. So before price wants to continue all the way up to its target, it needs to kick people out again. The algorithm strives to make moves exclusive. It doesn't want people sort of accidentally getting in or, catching the last bit of the move after it's been made fairly obvious where it's going. At this point, it's fairly obvious that we're bullish. So coming above this high, there's going to be a decent amount of people having their buy stops above here, and they'll place their stop losses below here. So yeah, it's going to kick them out one last time, comes up to trigger their orders, stops them out, and then we immediately get the run we're looking for. So, perhaps once I saw that we hadn't expanded higher after this touch, I could have moved my stop to below here, but profit's profit. I'm not too fussed. I'd already made a decent amount there. And yeah, there we go. That's pretty much it. So I hope you enjoyed. Hope you felt like you learned something. And I will be back next weekend for another trade review. Thanks very much. Goodbye.